As I have mentioned it in my last session also, that 90% of your job will be done. So Dow Theory is one of the most important tools that you should master, and they created panic. You should be focused on the primary trend. Now, the smart players who have information, who have influence, who have money, they know better than us. They have an extra layer of information. All these global agencies, what did they say when the market bottomed? There was panic in the market. We should still wait. The markets are going to go even further down. Hello and welcome to the next chapter of the CMT Level 1 curriculum. And today we are going to discuss about Dow Theory. Now, Dow Theory is one of the most important, I would say, concepts a technical analyst should know, because it talks about trends, it talks about the market breadth, it talks about the momentum and everything else. So, if you can, master this theory in a proper way, as I have mentioned it in my last session also, that 90% of your job will be done. But when we are talking about academics and when we are talking about academia, we have to stay to the syllabus. We cannot just jump above the syllabus, and we just cannot, start breaking and making this theory as we use it in our practical way. So we will stick to the theory, we will stick to the syllabus. But Dow Theory is a very, very broad subject, right? If you believe me, it is one of those tools that if you can do and if you can master it properly, it will help you a lot in your trading. It helps you to understand the trend better. It helps you to understand the momentum better. It will help you to understand about the cross market analysis and intermarket analysis. So Dow Theory is one of the most important tools that you should master when you are really thinking about going into this field professionally. So let us start about the Dow Theory. So first we will start with introduction, that what Dow Theory is and how it came about. So it was developed by Charles H. Dow, right? So Charles H. Dow is also known as the father of technical analysis, and then it was refined by his followers, William Hamilton, Robert Rhea. They refined the theory. So what Charles Dow did, he was publishing newsletters, right, in the form of the Wall Street Journal as we know it today. So he was the founder of the Wall Street Journal, and he started publishing newsletters to his clients, and he was using the Dow Theory. Now he was the one who have formulated the Dow Jones Industrial Average, the Dow Jones Transport Average. So he actually came up with the concept of indexes, right? And he was the one who formed these indexes that we still follow and that we still look up to. So what he did, he was publishing his reports, he was publishing his observations in those newsletters. And after he passed away, his followers, Hamilton and Robert, what they did, they created a theory out of those papers, right? Out of those newsletters that Dow used to send to his clients. And from those theory, they came up with 6 tenets, right? And they formalized it, and they arranged it, and they came up with 6 tenets on which that Dow Theory was formed. Now Dow usually talked about these 6 things in his newsletter, which helped him to time the markets. So this is the foundation of modern technical analysis. As I told you, that it is one of the most important tools of the modern technical analysis. Now, as we are, emerging, as we are evolving, we are just, we are just avoiding the base that is very, very important, right? We are so much bewildered by the algos and by the codes and by the whatever else, right? Indicators, that we have really forgotten the foundation of price action, the foundation of technical analysis. So I think that technical analysis is based on Dow Theory. The whole of technical analysis is Dow Theory, nothing else. So if again, I repeat it again and again, that if you follow it properly, just take my words that 90% of your job is done, right? So it describes how the market behaves. Now, behavior of the market. What is the breadth of the market? How the market is behaving? Whether the market is bullish, whether the market is bearish, whether the market has a good momentum, whether the momentum is going to fade out. It discusses the market's behavior. It will discuss about the trend strength, whether the trend is going to stay, whether the trend is going to change, right? The trend form and trend persistence, everything is discussed in the Dow Theory. So there are 6 basic tenets which form the core of the theory, right? So there are 6 tenets that forms the Dow Theory. So Charles H. Dow was, of course, the co-founder of Dow Jones and Company, and as I had given the introduction before also, that he was the co-founder of the Wall Street Journal, and he used to publish his theory in this. He used to publish his research in this Wall Street Journal. And As I told you, he created the Dow Jones Industrial Average in 1896. So he was the one who came up with the idea of indexes, right? And his editorials expressed market philosophy. So how the market were doing, what the market is doing, how the market is going to change, what are the factors that has to be kept in mind while trading, when to enter, when to exit, everything was discussed in his newspaper. As I told you that he didn't formalize the theory, but his followers did. So he just kept on publishing his research, and after he passed away, his followers came up with this theory. So what is the purpose of Dow theory? Now very very important. If you understand the purpose of Dow theory, it is the purpose of a technical analyst. So what is the first purpose of a technical analyst? That you have to find the trends in the market, whether the market is trending or not, whether it is an uptrend or a downtrend. Next is you have to distinguish between primary, secondary and minor trend. Now why it is important? Because it will help you to distinguish between what type of trades you want to do. So if you want to do a longer term trade, you have to focus on the primary trend. If you want to do a shorter term swing type of trade, maybe with the trend or against the trend, then secondary trend has to be followed. But if you are interested in very short term trades like intraday trade or some scalping trades, or even like buy today, sell tomorrow, sell today, buy today type of trades, then minor trends have to be kept in mind. So Dow theory recognizes the fact that market will discount all the news. So all the events that has happened, or all the events that is happening around you, will be already discounted in the price. This is what Dow theory, right, recognize. Now you can see how emerged was this theory even in the early 90s. All right. So again, he came up with another tenet that there are two averages. He created two averages. There was one Dow Jones Industrial Average and there was a Dow Jones Transportation and Average. So he came up with the theory that both the indexes must confirm each other. So if the industrial production, right, that was Dow Jones Industrial Average, the industrial production, if it is going up, then this industrial production should be distributed, right? There should be consumption of all the production things. So how this consumption will be confirmed? If this production is transported to the markets, to the consumers through Dow Jones Transport Index, right? There was the Dow Jones Transport Index. So if the production is going up, so the transportation should also go up. The transportation activities should also go up. If the production is going up, if the consumption is going up, if there is really demand, right? People are asking for more of the production, then the transportation should also go up. Then the transportation should also increase. So if the company is increasing production, the revenues of the transportation should also increase, because if we are producing and we are not able to sell it, right? If we are selling it, then we have to use the logistic to deliver it. So ultimately, if the logistic part is going down, if we see that the railroads, if we see that what we have produced is not been delivered, then what will happen? The logistic companies will start suffering losses, because they won't have any business, because there is no more demand in the economy. No one is wanting what the industries are producing. So ultimately, these two indices, right? If the production is going up, the logistics should also go up. If the production is going up, the transportation should also go up. These two should confirm each other. And if there is a divergence between these two, then it has to be noticed. So this is what a very very important, I would say, this is what we call it as a breadth analysis. In today's world, there are different sectors. In today's world, there are different type of indexes. We have mid caps, we have small caps. There are different type of indexes. So in 1900s, Dow Jones Industrial Average and Dow Jones Transport Average were used to determine the market breadth, were used to determine the market consumption. But nowadays we have many indexes to do this. We will show you as we move forward. Now another thing was volume. Just price is increasing and volume is not increasing is a red flag. The price should increase with the volume. Now this is a very very beautiful concept. In today's world, we call it VPA or VSA, right? Volume price analysis, volume spread analysis. We have just modernized the names, but the concepts are still 1900, like more than a century old. And trend will persist until definitive signals prove that they have ended. Now this is what is confirmation. Now Dow theory or Dow also insisted that until and unless there is a confirmation of the trend been ending, we are not going to take any action. So we are not going to be predictive. We need confirmation. We are not going to shoot out there in the blank that 18,000, 20,000. No, there should be confirmation that yes, okay, now the trend is changing. We have confirmation that the trend is changing. So very, very important thing. So what are the 6 tenets of the Dow theory? The first tenet is that the market will discount everything. Do not follow the news. Do not follow the papers. Do not follow the social media. If there is anything that is happening right now, it will be already discounted in the price. The price will already have the effect of that news. So whatever you hear, whatever you see, whatever you read is already discounted in price. So when it reaches you, when the news reaches you, the price have already reacted to that news. So you don't need to do anything. Okay. So again, see, if you understand the beauty of this thing, what does Dow wanted to say? That avoid all type of media. Avoid all type of noise in and around you and focus on the charts. Second is market will have 3 trends and all major trend have 3 phases. We will discuss one by one everything. The averages must confirm each other, market breadth analysis. Volume must confirm the trend. So if the prices are moving up, the volume should also confirm that yes, the real force behind the prices that are pushing the prices up or down. And then again a trend is assumed to be in effect until it has proper signals of reversal. That means that you cannot, just take any action on the basis of your gut feeling. You need a confirmation of the charts. We are chartists. We need charts to confirm the same. So the first tenet says that all information, whether public or private, is reflected in the price, right? Similar to the efficient market hypothesis. Now, what is efficient market hypothesis? It is covered in the following chapters. We will go through it. And it includes interest rates, it includes earning, politics, investor psychology, everything. So whatever, as I told you, whatever you see, whatever you hear, whatever you read, whatever you listen is already discounted in the price. It's already there in the price. So do not follow the media. Do not follow anything, right? So if you just remember, go and do some sort of research on yourself. What actually the World Bank, what actually the S&P, Standard and Poor, right? What does the Citibank, all these rating agencies, right? All these rating agencies, all these global agencies, what did they say when the market bottomed? Now this is a very, very recent example. Bottomed in 2020 March, right? Market was bottoming on 2020 March and there was panic in the markets, right? We all knew what happened during the COVID time. Let me show you the chart. Now you can see this is when the market started to fall, right? And there was a perpendicular fall right from mid-Feb till March end, right? And what happened, during this time when the prices were creating bottom, right? During this time when almost all the selling has taken place, these rating agencies, these big brokerages, they came up with their reports and they came up with their analysis that we should still wait before we can invest. The markets are going to go even further down, right? So already there was a lot of ambiguity and they created panic in the markets. So what really happened post that this market reversed when they came up with this analysis. So when you read any big brokerage house or any big rating agency coming up with a report which is published when the prices have already moved to the extremes. So most of the time you will see that something has already fallen down like almost 50-60% from its top. And after that they come up with a report that this is going to get even worse. It is going to crack more. And from that point, you will see the market starts to reverse this. Similarly, when you will see that when the things are very good, when the markets are making new highs, when we see that the moves are very, very strong, these rating agencies, these big brokerages house will come up with their buy ratings. They will come up with their ratings of add, right? Add more to your positions. And then suddenly you will see the market will crack down very, very badly. So what will happen basically during this time, that it tells you that the market is already discounting everything. So that rating agency is just creating a type of artificial panic in the markets, right? Because they want sellers to buy. So at this point, if you won't sell, at this point, if general public won't sell, how would a big rating agency, something like BlackRock, something like S&P, how will they buy? They won't be able to buy. So just follow your analysis, just follow your charts. In my mentorship program also, I strongly insist to all my mentees that you don't need to follow anything else. Just, throw away your Twitter handle. Just don't look at it when you are analyzing. Just don't look at the YouTube videos when you are analyzing. Don't search about the stocks on the internet when you are analyzing. Just be with your analysis, just be with your charts and do the proper analysis. This will help you better. This will help you to build conviction in your analysis. Right? So the first thing is that market will discount everything. You don't need to listen to anybody. Just listen to your charts. Second is the market has three trends. Now, this is a very, very important concept. It tells you the market will have three trends. The first is the primary trend. Primary trend is something like this, a bigger trend. Now, when we say that the market is in an uptrend, when we say the market is in a downtrend. So, as a technical analyst, when we are talking about trends, we are talking about primary trends. Alright. So, when you go to a TV interview and the host asks you that how's the trend looking, you will see people, commenting the trend is up, the trend is looking good, the trend is looking strong. So, when we are talking about a bigger picture, when we are talking about a bigger perspective, we are talking about the primary trend. Now, the primary trend generally lasts from months to years. Now, look at this chart. From point A, from year to year, we are talking about uptrend. Now, this is primary uptrend. Now, if I convert this chart onto a weekly chart, then you will find a better preview. So, what is this trend? Now, if I show you this chart and if I ask you as a technical analyst, what's the trend now? So, what we will say that the primary trend is up. Okay. So, we are talking about the bigger picture, which may last from years to months. So, this is the primary trend. So, if you are an investor, if you are willing to buy and hold for a longer term, you should be focused on the primary trend. And even in swing trading, we should always trade in the direction of the primary trend. So, this is called the primary trend, when the bigger picture, when the bigger trend is up. Similarly, look at this phase. This is a primary downtrend, where the prices were creating lower tops and lower bottom and they were moving down. And this downtrend stayed, we can see that it stayed in action for 430 days, almost more than a year. So, this is the primary downtrend and we can say that this is the primary uptrend. And again we see that this is the primary downtrend and then we had a primary uptrend. Alright. So, this is how the primary trend pans out and this is how the primary trend builds up. Primary up, primary down. So, when you are looking at a bigger picture, when you are willing to invest, when you are willing to buy and hold, then our main goal is the primary trend. Okay, we shouldn't be focused about the secondary trend or the minor trend. Secondary trends are the correction within the primary trends, which may last for certain weeks to months. Now, look at this. As I told you, this was a primary trend from point A up till right now it is still into a primary trend. Now, during this trend won't move in a single line. There will be fluctuations in the trend. So, we can see that there are minor corrections within the trend. This is a correction within the trend. There is a minor correction within the trend. Again, there is a correction within a trend. You can see that there are counter trend corrections within a trend. Now, these corrections are called secondary corrections and these corrections are correcting the primary trend. Alright. So, these corrections gives us opportunity to participate in the primary trend. So, suppose if we missed the opportunity to buy at this point, again we will wait for another secondary correction that will correct the primary trend. Now, this is the primary trend and this secondary correction has corrected the primary trend. We will get an opportunity to buy here. We'll get an opportunity to buy here, we'll get an opportunity to buy here and we again will get an opportunity to buy here. So, the trend which corrects the primary trend is called a secondary trend. Similarly, when we are talking about downtrend, so again you can see that these are the corrections which are taking place or which are giving us an opportunity to short in the direction of the main trend. So, this was the direction of the main trend, this was the primary trend down and we had an opportunity to participate in the downtrend using the secondary corrections. So these are the corrections which occurs counter the primary trend. Alright, so these are the two types of corrections. Now the third type of trend is the minor trend, that is the short term trend. Now let us come to the daily chart. And on the daily chart, what do you see? Let me draw it and then it will become more clearer. I see a move up, move down, move up, move down, move up, move down. Just see how these small trends are working. Right now, what these are called minor trends, and these minor trends are more of noise. They create more noise, they create more chaos. They are day-to-day activity that generally uninformed traders do. Right, so they are basically day-to-day activity that are more affected from news. They are more affected from third-party informations. So we as a trader, if we want to really make good money, if we want to really follow the trend, if we want to really buy and hold, we are not very concerned about the minor day-to-day up and down. We should be more concerned about the primary trend and the secondary trend. If we want to really make good money in the market, our focus should be on the primary trend more than anything else. So these are the three type of trend that you generally get, and these are the three type of trend which Dow recognized and Dow classified as primary, secondary and minor. Now going ahead. Now all the three trends, all the major trends have three phases. There is a bull market phase and there is a bear market phase. So what is the bull market phase? Bull market phase will have three phases. The first will be the accumulation phase. Accumulation phase are more of informed traders phase. I would call it a phase where really informed traders work, while others are very pessimistic. Now when you read this, that the accumulation phase is more of a informed traders zone and where others are pessimistic, can you make a picture in your brain that where this accumulation phase will appear during the market bottoms? So if I talk about somewhere about this zone. Now the smart players who have information, who have influence, who have money, they know better than us. They have an extra layer of information. They have an extra layer of intellect. They can hire intelligent people. They have extra layer of source and they know better than us when the markets are going to top and when the markets are going to bottom. So when the markets starts to bottom or when the markets have corrected considerably from the top, these are the players who will start accumulating the stocks slowly. And this is called a value buying phase. Means during this phase, the stocks are available at a very cheap price. Now, there is a concept of time and value, right? So it is out of the context of the CMT curriculum, but we will discuss it sometime as we move ahead. So the accumulation phase is more of a smart moves or smart players zone, and other people. Now see, as a retail trader, would you really have the guts to buy something here when the prices have already corrected almost 11-10% from the top, and this is on the index level, my friend? So the stocks must have corrected like 30-40%. So will you have any guts to buy it here? Will you have any guts to buy it here? Will you have any guts to buy it here? No, we won't have, because we have already seen the pains of top to bottom. There are many players who must have trapped themselves at this point. There are many players who must have trapped at themselves at this point. There were many players who must have trapped themselves at this point. Now we won't have guts, or we don't have that intention to buy here, because the news is pessimistic, the media is pessimistic, the Twitter handle is pessimistic, the YouTube is pessimistic, everything is pessimistic at this point. So as the general rule, general public is out of the stock market at this time. They won't buy at this time. So the people who have money, who have resource, will start accumulating. And then comes the next part of the public participation part. So once they have started buying at this point, and once they have done their accumulation, slowly the market will stop falling, and then news will start spreading that the market has stopped falling, the FIIs are buying, the DIIs are buying. Now this type of news will start rolling out in the social media. Now we always, when you go to Twitter, you will see that every time you will, get a table post market, FII itna kharida, DII itna becha, right? Those tables. Then the fund houses will start buying, and the sentiment will start improving. We will see the environment around us, the corporate environment, the production environment around us getting better, and then the market will start moving up, the market will start rolling, and this phase is called the public participation phase. Now, what is the public participation phase? Where everybody is like buying, especially I would say the mutual funds are buying, the technical analyst traders are buying, everyone is buying. Now, after this phase, the third phase comes up, which is called the euphoria phase. Now, what is the euphoria phase? Everyone who was left over, right? Everyone who tried to buy at this point didn't buy. Everyone who tried to buy at this point didn't buy. Who tried to buy at this point didn't buy. They were left over, right? And now what they will do? They will think that the markets, they will think that they have missed the train. So they will refer to the YouTube, they will refer to the Twitter, they will refer the newspapers, they will refer the TV, and they will jump like without considering anything. Now at this point, the trend was an infant. It was in an infant stage. Now at this point, the trend has grown up and have grown old, right? Yahan par, the trend has become an senior citizen, right? So if you ask an infant to run, he will run very, very fast, okay? But if you ask an senior citizen to run, he won't be able to run. And if you push him to run, ultimately he will collapse. And this is what really happens. So at this point, everyone else who follow the media, who follow their guts, they jump, and post this, distribution occurs and the market falls down. So this is called the euphoria phase, where the markets have almost perpendicular rallies. Now, just do one thing. Just go on the charts, right, and start looking at these type of zones. Start marking these type of zones by yourself. This is an accumulation zone. This is an public participation zone. This is a distribution zone, right? Start marking this. This is an euphoria type of zone. Look at the angle of the trend. Now, just a very, very important trick. Look at the angle of the trend, how the angle changes. Euphoria will almost have a 90-degree angle of the trend, which tells you that everything is at a termination point. Everything is at a termination point and trend can change anytime. So what we generally have during the bull market is again three type of moves: accumulation, public participation, and excess phase. Similarly, the opposite of these are the bear market phase. Now let me show you again, which is the distribution phase, where the smart money is offloading. Now this guy, the smart money guy who have bought probably at this point, will take off some profits at this point because he wants euphoria to happen at this point, and he takes advantage of that euphoric move and he just offloads his stock. So this is the point where distribution takes place. The smart money is distributing. Next is the public participation phase. Now everybody is selling, right? And there is a lot of chaos in the market, lot of ambiguity in the market. Everybody is selling. The news is very, very negative, and everybody on the news says that investors have been ruined. So much wealth loss of this investor. In a single day, he lost so much. His portfolio came down so much. This type of news will start flowing in the market, and the uninformed trader will start. Now, somebody who must have bought at this point, just imagine and just think about his psychology when the market makes this type of move, or when the market makes this type of move, right? He will exit everything. He will exit everything. And then when he exits everything, again the same cycle starts. The accumulation cycle starts, and again the public participation phase. Now this is the panic. This is where the panic is at its top. Everybody wants to be in cash. Everybody wants to get out. And this is where, the fear plays out. And then this cycle will keep on repeating in the markets, right? Now what you have to do, just go and practice these cycles on the charts right from the beginning, start from anywhere in the charts, and you will see these types of cycle everywhere in the charts, like accumulation, participation, distribution, panic, accumulation, distribution. Now, this will help you to understand the markets better. This will help you to understand the curriculum better. It's not just about reading theoretically what you have been given. It's not about reading that 600-page manual that CMT provides. You have to start practicing also. So, this is the first part, friends. We will continue the rest of the chapter in the next episode because we want our span to be very focused. So, we have already covered 3 tenets, and other 3 tenets we will cover in the next episode. So, stay tuned. If you have really liked the lecture, do comment and tell us how we can improve better. Do share it with your friends who are doing CMT or CFT or MSTA. It will be beneficial to everybody else. And the MCQ question will be posted once we cover the Dow theory part completely, and we will give the link in the description. The first part link is already in the description. You can go and watch the first part, and the MCQ of the first part is also there. So you can download those MCQ questions and practice it, right? So till then, have a great day, have a great week. Bye bye. Take care.